Hello everyone to YouTube channel Financial Lens, Finance Explained from a banker's perspective. Our today's topic is Budget 2026 expectations. Budget 2026 is just around the corner and salary taxpayer have one big confusion. New tax regime choose करें या old regime अभी भी better है. लास्ट दो बजट्स में टैक्सेशन में काफ़ी ड्रामेटिक चेंजेस हुए हैं. इनकम टैक्स स्लैब्स, कैपिटल गेन, सरचार्ज, deductions, everything. So in this video, let's talk realistically what has changed already and what taxpayers are expecting from budget 2026. I am a chartered accountant and company secretary with over 15 years of experience across NBFCs, nationalized bank and international banks. Let me explain this to you. Context. Why this budget matters. See, in last 2 years, the government has clearly pushed the new tax regime, right? Like lower rates, fewer slabs, less paperwork. The idea was simple: taxation with no dependency on deductions. For many taxpayers, this worked extremely well, but for many others, the new tax regime still feels incomplete. That is why Budget 2026 becomes important, not for big announcement, but for fine tuning. Let's discuss where we stand today, right? New versus old regime. Today, the picture is very clear. Up to a certain level income, the new tax regime is beneficial, like up to 24 lakh. Beyond that, many taxpayers still prefer the old tax regime. But the question is why? Because the old tax regime still offers like home loan interest benefits, HR exemptions, health insurance reduction, various saving linked schemes. Ideally, the new tax regime should be strong enough to replace the old one completely, but we are not there yet. And at the end of the day, there will be only one tax regime. Biggest shift so far. One major outcome of the new tax regime has been a huge liquidity unlock. Earlier, taxpayers invested mainly to save tax. Now, many people are choosing investments based on life goals, not deductions. Despite changes in capital gain taxation, market participation has not slowed down. SIP investments grow continues to grow like highest ever. Number of people declaring capital gains is rising. This shows increasing maturity among Indian investors. Key expectation from budget 2026. First is surcharge threshold. One of the strongest expectation from professionals and taxpayers is around surcharge. Currently 10% surcharge kicks in after 50 lakh income. Even a small increase above 50 lakh results in tax jump. The demand is clear. Increase the surcharge threshold to 75 lakh. This would make the system more balanced without changing slab rates. Second is standard deduction. The standard deduction under the new tax regime is 75,000. With rising inflation, higher rent, and lifestyle costs, taxpayers are expecting increase to 1 lakh or even 1.5 lakh. There are also discussions around additional relief to defense personnel also, which I believe we should give because like they are protecting us, and seeing the current political scenarios, we need defense personnel a lot. Next is health insurance. Health insurance costs have risen sharply. Although recently we got GST deduction and all, but under the old tax regime, Section 80D allowed 25,000 for self and family, 50,000 for senior citizens' parents. The new tax regime offers no such relief. A healthy family need a healthy insurance, right? A limited health insurance deduction could make the new tax regime far more practical. Next is home loan interest, at least for first time buyers. For home buyers, especially first time home buyers, the new tax regimes feel harsh. Home loan interest reduces actual disposable income but gets no tax benefit under the new tax regime, which like a discouraging thing for new tax regime payers. Even a targeted or capped deduction could ease this burden significantly. Next is HRA, the metro city problem. One of the biggest pain points in HRA is HRA. In the new tax regime, HRA is fully taxable. In metro cities, rents are high and rising, right? Like rents are increasing almost 15 or 20% every year nowadays in metro cities like Noida, Delhi. Taxpayers are expecting partial exemption or a standard rent reduction. Without this, many salaried employees find it difficult to switch regimes. Next is capital gains. On capital gains, the direction is clear. Long term capital gains taxation is now 12.5% with no indexation for most assets. There is a there is no major expectation of change here. The government seems focused on simplicity, predictability, uniformity across asset classes. If you want a detailed video on capital gain taxations, then let me know in the comments. I will post it. Let's discuss what if these changes happen. If even some of these expectations are addressed, the new tax regime could finally become balanced, practical, and truly default. Maybe I will also shift to new tax regime in that scenario. This would increase adoption and provide relief to crores of taxpayers. Reality check. That said, expectations should remain realistic. The government core philosophy remains simpler taxation, less verification, more compliance through design. Any changes will be likely targeted, not dramatic. But considering the political situation here, geopolitical things going on, I guess defense will get the major portion of the budget, and maybe we have to wait for these changes. But let's see how it goes. See, budget 2026 is not about revolution, it is about refinement. Understanding this mindset helps you make better financial decisions regardless of the outcome. If you want finance explained from a banker's and credit perspective, subscribe to Financial Lens. Thank you so much for watching this. Please like and subscribe. Thank you.